All right, so get this. Today we are diving deep into the mind of a guy who not only survived the 2008 market crash,
Oh, yeah.
but came out on top.
Wow.
Michael Edward Perinotti.
Okay.
Mike to you and me
Right.
was named Trader of the Year
Really?
at T3 Alpha Fund during that infamous crash.
Wow. During.
So yeah, the man knows his signals,
Mhm.
and he shared some seriously valuable lessons with us, focusing on how to read the market like a pro.
And these aren't just, theoretical concepts.
Right.
Mike's talking about battle-tested strategies he's used to navigate some of the most turbulent markets in history.
Exactly. So first up, bearish signals. We're talking about those subtle hints the market drops that tell you to proceed with caution, maybe even hit the brakes for a bit.
Now, you might think a bearish signal is just the stock going down, and sure, sometimes it's that simple.
Okay.
But Mike digs deeper. He looks for confirmation from other indicators, especially volume. He says volume is like the market's voice.
Interesting.
If a stock's dropping on low volume, it's like a whisper. Maybe not that significant. But if it's plummeting on huge volume,
Yeah.
that's a shout, a clear signal that something's up.
Okay, that makes sense. It's not just about the direction of the move.
Right.
It's about the conviction behind it. So how does Mike actually use volume to spot those bearish reversals? You know those moments when a stock seems to be rallying but then takes a sudden U-turn?
He's got a keen eye for what he calls volume divergences.
Hmm.
Let's say a stock hits a new high, everyone's excited, but the volume is lower than the previous peak.
Oh, wow.
That's a red flag for Mike. It tells him the buying pressure is weakening and a reversal could be on the horizon.
It's like that moment at a party when the music's still blasting, but people are starting to head for the door. The energy's shifting, even if it's not obvious to everyone yet.
Exactly. And that's when Mike starts looking for his exit strategy. He'd rather be safe than sorry, especially when the market's showing signs of indecision. And that's where support and resistance levels come in handy.
Those are starting to sound like our market roadmap.
Yeah, Mike uses them like that to anticipate where the buying and selling pressure might kick in.
So instead of just seeing random price swings, we can start to identify those key levels where the market might change direction.
Precisely. And Mike doesn't just rely on basic chart patterns here. He factors in things like Fibonacci retracement levels.
Fibonacci retracements.
Yeah.
Okay, that sounds a bit more technical, but fascinating.
Yeah,
So Mike combines these Fibonacci levels with his chart analysis to get a more precise reading on where the market might turn.
that's right. He's all about stacking those odds in his favor, and he's got a knack for spotting those subtle confirmations that most traders miss. Like, let's say a stock is approaching a Fibonacci level that also happens to line up with a previous swing high or low.
So it's not just about the Fibonacci level itself, but also how it aligns with the stock's history.
Exactly. Those confluence points, as he calls them, are where the magic happens, and often that's where you'll see those big explosive moves that momentum traders drool over.
Speaking of momentum. All right, let's talk momentum. We've got those bearish signals on our radar. We're tracking those support and resistance levels like pros now for the real action.
Right. Now things get interesting. Momentum trading is not for the faint of heart. It's about identifying those stocks that are poised for explosive moves and riding that wave as far as it'll take you. But timing is everything. Get in too early and you risk getting chopped up in the noise. Get in too late and you might miss the boat altogether.
So how does Mike find that sweet spot? How does he differentiate between a stock that's just bouncing around and one that's about to blast off?
He looks for what he calls high-probability momentum setups, and this is where his entire approach comes together. He's not just chasing any old stock that's going up. He wants to see a confluence of factors, a strong breakout from a key resistance level on high volume, ideally confirmed by a surge in buying indicators like the Relative Strength Index, RSI.
Okay, so we're talking about a perfect storm of bullish signals, price action volume, and indicators all aligning to create that explosive upward pressure. But it doesn't end there, does it? Because even with all those signals flashing, green momentum can shift on a dime.
Absolutely. That's why Mike's always got one eye on the exit. He's constantly reassessing the strength of the trend, looking for any signs that the momentum might be waning. And he's not afraid to take profits early if he senses the party's coming to an end.
It's like riding a wave. You need to know when to catch it, ride it, and most importantly, when to jump off before it crashes down on you. So how does Mike determine when it's time to bail? What are some of those signs that the momentum might be fading? So how does Mike determine when it's time to bail? What are some of those signs that the momentum might be fading?
He's got a few tricks up his sleeve. One thing he watches closely is the relationship between price and volume. Remember how we talked about volume being the market's voice?
Yeah.
Well, when a stock is making new highs but the volume is drying up, it's like that voice is getting weaker. almost like it's running out of breath.
So even if the price is still going up, that weakening volume is a warning sign that the momentum might be losing steam.
Exactly. Mike calls it a bearish divergence, and it's often a precursor to a reversal. He's also watching for signs of distribution. That's when big institutional investors start unloading their positions. They're usually the smart money. So when they start heading for the exits, Mike pays attention.
Okay, so it's not just about riding the wave as long as possible. It's about recognizing those subtle shifts in momentum and getting out before it's too late.
Precisely. And that's why risk management is so crucial for momentum traders. Mike has this saying, protect your capital first, profits will follow. He always sets stop-loss orders to limit his potential losses, even when he's feeling confident in a trade.
So even someone with Mike's track record, remember Trader of the Year during a crash, never throws caution to the wind.
Never. He knows that even the best traders get it wrong sometimes, and he's not afraid to admit that. What sets him apart is his ability to manage risk and protect his capital so he can live to trade another day. That's a lesson we can all take to heart, no matter our trading style.
Absolutely.
Huh.
This has been incredible. So much wisdom packed into one deep dive. Before we wrap up, any final words from Mike that really stuck with you?
He said something that really resonated with me. Trading is a journey of self-discovery as much as it is about the markets. He believes that to succeed in trading, you have to truly understand yourself, your strengths, weaknesses, and risk tolerance.
Wow. So it's not just about learning charts and indicators, it's about mastering your own psychology and emotions.
Exactly. And that's a lifelong pursuit.
I love that. It's a reminder that we're all students in this game, constantly learning and evolving. Well, on that note, a huge thank you to Michael Edward Perinotti for sharing his invaluable insights. And to you, dear listener, as you navigate the exciting, sometimes daunting world of trading, remember Mike's words: protect your capital, study the markets with an open mind, and never stop learning.